The jobs market is front and center as the Fed's Jackson Hole Symposium that you may have heard us speaking about kicks off. Recent data has exposed some weakness, though, bolstering Wall Street's calls for rate cuts. So let's break down why the jobs market is so important to the Fed and get to the truth about the health of American jobs here. Here with more, we've got Yahoo Finance's Morning Brief and Catalyst co-host Seana Smith.
Hey there, Brad. Well, let's get to the truth and let's talk about what has been going on within the economy, because if you've seen those recent data prints, it might be a bit confusing. Right now, though, the conversation seems to be all about jobs. And why that is, well, it's pretty clear. We know the Fed has a dual mandate to promote maximum employment and stable prices. Now, for the last couple of years, the Fed has really focused on the inflation side of the equation, raising interest rates to a 23-year high in an effort to tame inflation. And by and large, many would say that their efforts have paid off, as we have seen a steady deceleration in prices. Now, on the flip side, the other side of that equation, well, that's the labor market. And right now that is front and center. Much of this thanks to that weak jobs print that we got back in July. We also got the revision earlier this week on jobs numbers, and that's adding to that weaker labor market narrative. Non-farm payrolls were revised lower by more than 800,000. That was the largest downward revision since 2009. Now, I spoke with Omer Sharif. He's the founder and president of Inflation Insights. He, along with Evercore senior economist Marco Casaraghi, about their assessment of the economy. Here's what they had to say.
It does show that the labor market was a bit cooler than what we expected in the 12 months to March. But again, I think the key thing for the Fed is what's happened since then. That's the unemployment rate has risen to 4.3, higher than what they had expected for year end, which is 4%. I think that's going to be the more relevant issue for them.
If you zoom out, you see that the economy is slowing down but still growing. The labor market is softening, but it's not rapidly deteriorating. And so overall, this picture is more consistent with a soft but bumpy landing than a hard landing.
So what does Marco say that the data is more consistent with that bumpy soft landing narrative, maybe more so than a hard landing? Well, it is because some of that other data that I referenced earlier, strong retail sales showing that consumers, well, they're still out there spending. Initial jobless claims known as a proxy for layoffs and continuing claims, both of those figures relatively steady levels. But it is fair to say, though, that the recent mixed economic readings does have Wall Street split just on where exactly we stand. So we spoke to Ahmed Riesco. He's Insignia's chief investment officer, along with Joe Bruce-Suelas, RSM chief economist, about just that. Here's what they had to say.
We know that the U.S. consumer is doing okay, but the U.S. consumer is doing okay because they still have a job. The second that the employment market flips from one of surplus to one of deficit, which is something that we're rapidly nearing, we think the U.S. consumer, unfortunately, will falter.
I'm not sure what economy he's looking at, because the American economy is now getting ready to flip. We needed to slow hiring down in order to return to price stability. We slowed hiring down. Price stability is returned to the U.S. economy. Federal Reserve is getting ready to cut rates, both to protect and preserve the soft landing, put a floor under the labor market.
Safe to say they don't agree on where things stand, but whether or not the Fed is able to put that floor into the jobs market, well, that is the big question. For consumers, for Americans, maybe many of you at home, well, you're a bit nervous about where we stand today. There's a new survey that was just released by the New York Fed, and that actually found that the number of people who expect, and these are expectations, to lose their job in the next 4 months, well, that actually just reached a record high, Brad, of 4.4%. So you look at the data, you can almost support any sort of argument that you're trying to make. Yes, there is reason to be concerned. On the flip side, there has been relatively steady, strong data that can support that narrative of a soft landing. But it's clear to say, and I think that New York Fed survey really drives it home. Americans right now, they are very nervous about what exactly their future looks like at their jobs. And many of them are preparing to potentially lose their jobs here over the next several months.
Yeah, net bracing. And if they're in that group of people that are concerned, we've got a conversation coming up for them. Shauna, thanks so much for breaking this down.